There are several things that I think are very, very relevant and very, very important for the current real estate market here in March 2023. We're in a time right now where there are a lot of questions, a lot of concerns, and a lot of uncertainty. And my hope is that through this information that I'm sharing with you today in this video, that it will help you in making informed and wise real estate decisions. Hello, if we haven't met yet, I'm Sue Singleton, broker, owner, and realtor of Carolina Coast Homes Real Estate here in beautiful southeastern North Carolina. So let's hop right into our discussion today. So this year started off with sort of seeing good buyer demand, good activity in the market. So the first part of February, the mortgage interest rate dipped down into the fives. And then as we start to hear more uncertain economic news, relative inflation, and other things, interest rates started to climb. And really, that reaction may mean that we are not as far along in the fight against inflation as we thought we were. And that might be causing interest rates to rise. Now, there are other reasons for that as well. But let's just focus on that for now. Unfortunately, that's caused a lot of people in the market and a lot of uncertainty in the market as well. But here's what I would tell you about this. If you think about it, over the last 30 days or so, we're starting to see what I'm going to refer to as a range of interest rates. We get some good news on inflation, and we're there in the low sixes and high fives. And then even while I was working on my research for this video, interest rates rose just slightly over 7%. What's important is to be aware of that which influences interest rates, and mainly that is the 10-year Treasury. Sam Cater from Freddie Mac said it really, really well. He said this: the economy is showing signs of resilience, mainly due to consumer spending and rates increasing. Overall, housing costs are also increasing and therefore impacting inflation, which continues to persist. So that means that over the last 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury. So a 10-year Treasury is a bond that guarantees interest plus repayment of the borrowed money in a decade. The 10-year Treasury is just one of the securities issued by the U.S. government. Now, Forbes has a lot of really good information out there about 10-year Treasury. And if you would like to research it a little further, I would suggest maybe you go over to their website and check it out. But here's what I think happens. As interest rates rise, folks tend to think that nobody's going to buy. However, people are still buying, but some will look at the interest rates and they'll go and they'll say, you know what, we can't afford to buy right now, so we're not going to move forward. But actually, the thing I think that is a bigger challenge right now, more than interest rates, because listen, we will get through this interest rate challenge. But the even bigger challenge that I see right now is inventory. I don't know of any market that says we have an oversupply of inventory. Maybe some markets have more available homes for sale than others, but the story of the last few years, and certainly through COVID, has been less inventory. The meaning of home changed, right? People started working from home. Their kids were going to school at home. They were eating at home most of the time. They were working out, doing their exercise at home. Everything revolved around home. Interest rates sank to 2 3/4. And people jumped in and said, well, now we're going to do it. We're going to buy a home. We're going to find our place. We have a different need. And that started to deplete inventory across the market. And we've seen that. We've seen that in the market. We've seen it over the last couple of years. And while inventory has risen every year, it's still below where it was in 2019. And that's a really important point. So I want you to listen up. Anytime you're looking at numbers right now, you can't compare the current market to 2021, 2022, or even 2023. You've got to go back to pre-pandemic times, which were the normal times. That's what I'm going to call it in real estate. 2017, 2018, 2019. So there is significantly less inventory across the country. And we know we need more. We know those issues are out there. That's the bigger issue than interest rates right now. And I just want to say it again. We're going to get through this interest rate challenge. I know that we will. Now, I think this is another very, very interesting and important point as well. Because if we can all understand this, we can all move forward confidently. The first piece is the lack of inventory in this country has kept upward pressure on prices. Now, I believe that is the main reason things haven't spiraled out of control like we saw in 2008. So let's think about it this way. When you have around 14 straight years of a lack of building homes, then you end up with a deficit, and then everybody rushes in during COVID due to the low interest rates. You don't have the available inventory, and that caused prices to spike. Now, let's not forget the frenzy of the multiple bid scenarios, right? And that was primarily due to the lack of available homes. And depending on whose information you're actually looking at, they would say we're still undersupplied. Anywhere from 1.5 million homes to 5 million homes throughout the country, depending on the market. Now, people often ask, so why is there a discrepancy between the two numbers? Well, it really comes down to this: how the forecasters are evaluating things. So I always suggest that you take a little bit of time, check things out for yourself, and do some research on the market forecast. But the commonality they all have is there aren't enough homes on the market for the number of people that want to buy them. And that's what I'm hearing from across the country as well. And I'm seeing that in our local markets here in southeastern North Carolina. So here is my question for you that I want you to consider, and that is, should I buy a home right now? Well, there are three things that are important about understanding this question. First of all, rent always goes up. Certainly in the last couple of years, it has gone up dramatically. When you buy a home, your mortgage payment remains fixed. That's a key piece right there. Rent goes up, but with mortgage payments, you can bring stability to that part of the largest expense for most of us in our household budgets. Okay, so the second thing, prices generally go up. Well, let's look at this. Most people would say, look, we're going through inflation, and we are, but you know what? We will get through that. Interest rates will come down over time. We just talked about that. Now, some forecasters throughout the country are saying that prices may very well come down slightly. And I'm not making light of that, but do keep in mind that it's going to be relative to individual markets and local market conditions for most areas. Some markets probably will see little, if any, price reductions. But here would be my point. If you wait for prices to drop, you wait for interest rates to come down, what do you think everybody else is going to do? Yeah, you got it. It's almost like Black Friday at Walmart. You ain't getting in. And if you do get in, you're getting into a fight. That's the bottom line. And I do believe that will be around the corner. And certainly I'm not thinking that it's going to be the frenzied market that we saw in 2020 and 2021 especially. Remember, homes go up in value, but rents always go up as well. You can secure your payment, your housing payment, through buying a home, and it's an appreciating asset. So let's recap. Rents go up, prices go up. And what does that lead to? Well, that's the third point here. And that is when you own your own home, you become a builder of equity. That investment you are making in buying a home is an investment that will pay off in the future by growing the equity interest in your home. Now, I know there are a lot of people right now that are saying it doesn't make sense to buy a home. And if you listen to the media, they will say the real estate market's in trouble, homes are going to lose 20% in value, and the housing market is going to crash any minute. Now, honestly, based upon what I'm seeing from the forecasters and in our local market, that just doesn't appear to be true. Now, none of us, however, have a crystal ball. There are lots of things going on out there in the world, and we all know how the media likes to hype up the news cycles. But what I would say is listen to folks and talk to folks that bring you the truth, that will tell you the truth about the market, and take a little time to do your own research. Being informed means that you can make wise and confident decisions regarding your real estate goals and needs. Now, I know that we covered some pretty heavy stuff today, and I want to thank you for sticking with me. And I want you to remember that no matter where you are in your real estate search, Let's connect to talk about your goals and options in the current market and find out if now is a good time for you to buy a home or to sell a home, to find out if Oak Island, Southport, or even one of the other beautiful locations here in southeastern North Carolina is right for you. And listen, if you haven't already, subscribe to my channel to stay updated on all things happening in the real estate market, and in particularly what's happening here in southeastern North Carolina. Please make sure to like and share my video, and listen, leave me a comment. I'd love to hear from you. And remember, happiness grows here. I'll talk to you next time.